Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
John, what do you think? What do you think of AUX, the U.S. dollar against the Australian? Do you trade Aussie dollar? And
I do.
To me,
I definitely do. And I have a pretty strong opinion on that. I think that that's a market that's going to trade in a range bound. I think that we've bottomed out, or we're close to a bottom in that market. It clearly, getting near 98.50, where the spot was at, and then falling as low as 61 or 60, and then bouncing a little bit from there. The central bank out there looks like they're going to have to do some more rate cutting for a while, for the foreseeable future. But net in the long run, I think Aussie dollar can rally back to the 72, 73, 74 level in 2009, as we will see when this deflationary sentiment does abate. I think we'll see a pop in these commodities. I even think oil, a lot of the ags out there. I'm going beyond currencies now, just talking general market stuff, are going to put in a bounce. But to me, I know I'm kind of all over the place here, but short term, meaning like the next couple of days, I think the overall equity markets put in a high. I think in the next couple of weeks we make one nasty, vicious cycle back towards the low again. So if you're going to build a long Aussie position, I'd do it like in 2 weeks from now, because I think we have one more really scary move coming down, and then from there we can begin to bottom out a little bit, or at least in some of then we'll begin to see a decoupling of these markets, because we've really had a one trade develop. It's a very polarizing market. You're on one side of it or the other. There's no middle ground. And I think that polarization, or that one trade dynamic begins to unwind the next couple of weeks here.
So you also think the Canadian dollar will probably also put in a bottom sometime in the next couple of weeks and rally?
I think at the rate with which, the rate with which our federal government's expanding their balance sheet, a lot of us have probably seen the emails that put into context just how much capital is being spent. And I think in the long run, it's going to have an adverse effect on the U.S. dollar. And it's going to have an adverse effect on our Treasury market. But in the meanwhile, the rest of the world is slumping prohibitively as well. And as a result of that, I don't think that it's going to come as soon as people think. I think a lot of people who are actually trying to get short bonds and trying to get short our dollar are going to be hurt short term. And but longer term, though, the dynamics with which they're trying to factor in could end up playing out.
What about, do you see the yen actually rallying any more in 2009? Or
I could see yen. I definitely can see the yen rallying some more. We put in a high at 88. I have to think inverse now. Okay, so USD JPY. We put in the USD JPY. I think put a low of 87, 88, somewhere in there on that most recent spike from 2 weeks ago. I think we can retest that, go a little bit above that level, and then maybe run back to parity in January sometime, once that final shakeout has come. But again, if I think the U.S. equities are gonna come and retest lows again, if I think commodities are going to come and retest lows again, then looking to short yen is not something I want to do. I still remain bullish neutral yen over the next couple of months.
So, last year, for you looking at yuck, which is the U.S. dollar against the yen, you traded as high as 120 and then recently down to maybe 90 or 89.
Right.
Do you see it trading to 80? And what do you think the range is next year? 80, 110, 120?
Or maybe even 80 to 105. The bottom, with that range, there's lots of opportunity for bulls and bears within that range right there. So.
Right. Take one or two more questions. Wendy wants to know, what are your thoughts on, I don't even know, the TNX falling while market going up? Is that a yield? I don't even know what that is while market going up.
The 10-year Treasury yield, is that what she's asking?
That is, yeah.
Okay. 10-year Treasury yield falling while the market goes up is pretty intuitive. We're dealing with a deflationary environment that's in place right now, and what's the one thing that you want to, owning yield or owning treasuries when we're seeing negative real growth is the first knee-jerk reaction for portfolio managers to pump on money into.
John, what do you think of T-bills trading at zero here, or near zero, for the last couple of weeks, and how long do you think that's going to last?
T-bills trading at zero, or the Treasury will print as many T-bills as they can get away with. With as much money as they're printing, the fact they could borrow cost at next to nothing, and taken with that exposure, I guess it just depicts the overall fear that we see in the market. And if you want to go back and look at things like the TED spread or LIBOR and all those other things, they all sort of, again, one trade. Banks aren't lending. People are afraid. We're dealing with an inflationary environment. They can't trust corporate paper out there. There's a lot of ambiguity. There's a lot of nebulous business enterprises that we're just not sure what they're involved in, and then that's only exacerbating the flight to quality, and that's why we're seeing T-bills sitting at 0 bips or 5 bips or 8 bips or whatever they trade at each day.
I guess this would be my last question, unless somebody else has any questions. John, how about the auction process that was supposed to happen, and do you think the government's going to be able to get that going and get this paper out and into more transparent market so that everybody knows what the heck's going on?
I think it's not going to be the government alone that does it. It's going to have to involve the world's leading exchanges, and that's something that you may be better suited to comment on. But this whole facilitation right here is not going to just come from the Treasury. It's going to have to come from the largest exchanges and a large contingent of the private sector to really get this functioning again. Because the government can do everything it wants, but unless banks are lending money to small businesses and it's reaching the end product, all this whole process is doing is helping banks' balance sheets get better and ensuring their profitability. It's not actually speeding up or lubricating the economy, which is what the intent is.
That's a really good point. In fact, you could write a whole bunch of articles on that, but that's the thesis that makes a whole lot of sense, John. All right, one last question from George. What about China? What do you think? I know that they announced a fiscal stimulus package, a couple weeks ago. They said they're going to spend their way out of this. And what do you think? Do you think they will be able to sort of be the world's engine?
Yes and no. Wow. Chinese was my major at the university. I speak Japanese and Chinese and lived abroad and familiar with their culture and wrote my senior thesis actually on their stock exchange. But China's macroeconomic growth is not something I question. I'm more concerned about, do they have the financial institutions in place to handle a type of global recession that can impact them really for the first time since they've made the move to capitalism. If you look at Deng Xiaoping in the early 1980s and what he did as far as providing reform and China sort of serving in this protected capitalist economy that's been allowed to grow at its own pace. Well, over the last 4, 5, 6 years, we've seen double-digit economic growth, and for the first time, this global retrenchment is hitting them very, very hard. And with the slowdown in the U.S. and with the slowdown in the neighboring Asian nations and in Europe, this mercantilist, export-driven economy can really come under heat. I think longer term, the macro picture for China is good. I have to say, though, I'm just not sure if their institutions are ready for the kind of economic slowdown that they're facing. So that's very ambiguous and very vague. Short term, I'll say I think they're going to go through a lot of pain. Longer term, I think the China story is alive and play, but we're looking like, 2020, 2025, as they get a chance to really experience their first major recession. And by China recession, I mean 4 or 5% growth.
Right. I appreciate your honesty on that. So do you trade Chinese stocks actively?
No. Between the 30 major markets that I cover and between the option strategies I put on top of those, there's more than enough for me to chew on.
John, I just want to say thank you. I think that the amount of information you gave us was really amazing. We've been here for, I guess, about an hour, but you've given us so much. So I'd love to have you back, and you could maybe we could pick one strategy or two, and you can sort of go through it, because I think
Sure.
that all the attendees really appreciated not only your options knowledge, but your knowledge of the old markets. And we don't get that. In fact, every guest we get something, but you bring something completely different than most of the other guests. So I appreciate you spending time, especially on this holiday weekend. Thanks so much.
Thank you, Steve, and thank you, everyone. And to get in touch with me, osoktrading.com. I blog there, and you can just from there just get in touch with me. That's osoktrading.com. Thanks a lot, everyone.
John, can you move that? Is there a slide there that I could bring everybody?
Let's see here.
Okay, great. Okay, great,
right
great. John, thanks again, and I'll be talking to you soon. Have a trading day tomorrow.
Thanks a lot, Steve. Best of luck, everyone.
On the behalf of the International Securities Exchange, this is Steve Meisinger saying, have a safe trading day tomorrow, and please go check out www.osoktrading.com. See, it has a 7-day trial for $25. I mean, it's $25. Check it out. You may really enjoy it. I think you probably will. He has books he's written, and he's going to be at the Traders Expo. So check him out. John, thanks again. Really appreciate it. And look forward to having you all back this Tuesday with another webinar. Thanks so much. Have a great evening.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.